Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for Big Earnings Day, July 25th, 2019, which is where we'll start today's video. We have information, we have outcomes, and we have trade results. The earnings plays, the butterflies, the verticals, the long puts, the short calls, all the trades that we have will be known at the end of this video, this evening, and tradable into Friday's session. So if you don't trade before earnings, you'll have some opportunities potentially on Friday in these names and other stocks to trade against expected moves and where the markets settle. Because as I'm doing this video, it's about 15 minutes after the market has closed. We don't have the complete picture, but we have enough to go on. And we'll just pick it up where we left off on Tuesday with expected moves, with plays into these levels, and of course butterflies, verticals, and the like. But first, in today's session, we had the S&P down 16 points, with the Dow mini futures also down 0.5%. The Nasdaq was off 0.75%, but the mean old Russell was down 1.3%. It remains the weakest market, or at least the weakest index that we cover in the equity futures markets. Nonetheless, the S&P, we can zoom in before we talk about stocks and where we are. The S&P pulled back from its all-time high. So today's session was a consolidation day, which is expected given how many earnings we had and what we're going to have to put into motion Friday with hedging and balancing and repositioning. Of course, funds would do that as well. Hedge funds, quant funds, prop funds. It's going to be a lot of activity, maybe even a lot of volume and opportunities and risk on Friday's session. But now, we did get the consolidation pullback or retracement away from the high. We got our bullish dominant thesis pushing us up away from that 20 exponential. So we'll start Friday session fresh, roughly at 3,000. So that'll be a key pivot point without a whole lot of directional bias. Thought process is in the future at the end of July into August, we may get some rotation down. But of course, we will have the Federal Reserve announcement on July 31st. So that could throw a monkey wrench in the market and shoot the index straight up toward and above 3050. But that's for a future video. Tonight, we're talking four names. In no particular order, we'll start with Amazon. And what I'm going to show with tonight's video is just the immediate, or I guess we call it the snap reaction. This may and probably will be different by the time you're watching the video and by the time you're trading the session in Friday. So a couple of points to take into note, because this is, again, is right after the market close with all of that volatility. Markets that go, we'll talk expected moves, we'll talk intraday pivots. But if Amazon, as we'll see in other stocks like Intel, if they're going to open up into their expected move, that could be a spot to fade against. So if it gaps to the upside, the expected move, look to play short in Friday session. If it gaps down in the expected move, look to play long into the pivot. But be a little bit cautious. Look for that pivot to be hit. Look for that expected move to be tested or achieved. If you get outside of that, for example, 2 times the expected move, you're going to get in a situation like Netflix or like some other companies recently like Tesla, where a stock that goes well beyond where it's expected traps participants and causes more price action or more movement in that direction. So don't just be a fader just to be a fade trader. Fade into expected moves, not beyond them, for an intraday trade only. All right, let's talk Amazon. So in the session today, I discussed the probabilities, not certainties, but probabilities favored a downside move in Amazon. And that mainly came from this logic of we are into a rising parallel trend line into the 2,000 per share level. And if we can draw out the future, we can see just simply making these connected highs, lows, highs, lows, highs, lows, ad nauseum to the future. Of course, that won't go on forever, but the thought process was Amazon had greater odds to come away from the 2,000 level down toward 1,900, maybe even all the way into August into 1,800. We'll certainly see if that happens. Well, tonight's earnings, it had an expected move of about $70 for implied volatility up or down $70, 65%. And pushing that off the way, any trades, any verticals, any calls, any puts, any sold positions, or any butterflies, we will be looking for a $75 move, and there we have it. So Amazon closed the session roughly at officially 1973, 1970, and that is pushing down $70. So that is where the expected move played. That is the value or the excitement or the profit or the edge in this strategy. So from roughly 1973, $70 down takes it to just about, right at actually, 1900. And that's where Amazon pushed. You have to be super trader to get this. But again, watch where these levels are on Friday and then trade departures from them. $70, 1900. In the grand scheme of things, that is pushing us down in our dominant thesis, or bear positions, bear plays, into Amazon shares on the daily chart. Again, volatile action with the time of the video. You'll have more information on Friday morning and the trading session. Nonetheless, 1900 is your pivot for Amazon, and you're already seeing some motion in the after-hour session away from the expected move pivot. Next up, again, no particular order here, is Google or Alphabet. In my session at the close today, I made reference to Google being in the middle of its upper spot, 1225, or lower spot, 1025, because it's roughly at 11:35, but it kind of keep the logic going, 1125. And where was the expected move for Google? I have to watch this one closely, because it was a $47 expected move, or at least earnings expected move. 47 up or down. So roughly from 1135, that takes us to about 1185, 1180, 1190, that range. Depends on how you calculate. Or to the downside of about 1075 or 1085. Well, as of this video, Google has exceeded the expected move. So it's up not 47 to the upside, which would put it roughly here, 1180, 1182, but it's almost double that. So we're here. If this is true, Google shares or Alphabet shares will start the trading session near the upper target. And my thinking on that was there really wasn't an edge, given that price was at the midpoint, at the middle of this spot. It is, in trading opportunities, a 50-50 bet, whether the market goes up to here or down in terms of swing trader logic. That's not the case we had in Amazon and some other names we'll talk about, because they were into the upper resistance or lower support. Google had a crapshoot and probably was not a good trading candidate. And it's exceeded that expected move. So Friday session, Google shares will start up, at least if this holds, above 1225. And that could be a short sell against resistance. Of course, we'll watch that and monitor on Friday's session. But a little bit bigger than expected move at the moment for Google. Next up is Intel. And Intel had the bull play going. This is going to be fascinating because this changed since last time I looked at it before the video. So Intel had a break to the upside, broke above 50 per share. That put it in open air territory, playing to the upside, playing maybe to 58, 59 per share. Let's sneak in the expected move, and that is roughly about $2.60. So 250 up, 250 down. What's going on right now? We can sort of sneak this in here. From 52, Intel shares went all the way to 56, pushing a little bit above the expected move, and then right back down. So I'm not making comments on the news necessarily in terms of the time frame for the video, but I'm looking at just the expected move, just the immediate price action, and giving a framework for how to think about, trade, manage, enter, close, maintain positions into these names if you have them on. Or if, again, you want to trade fades or departures from these points on Friday's session. So that took it right to the upside. Maybe something they said took it right to the downside. So as it stands right now, again, the time of the video, Intel shares will open up at 52. That's certainly plenty of time before now and Friday morning. But that took us up a little bit beyond that $2.64 move, and then all the way back down. And again, in the context of an open air move without clear trend lines or clear boundaries. The most recent one is 50 per share. Last but not least, we'll take a look at Starbucks. Everybody's favorite, or least favorite, caffeine or coffee machine, or liquid crack as we might call it individually. Starbucks continued to show up on my list of stocks that are making new 52-week highs, or stocks that are strong in strong uptrends and likely to get stronger. So there's plenty of opportunities for bullish positions or bullish trades or different ways to trade into a strong stock getting stronger. Of course, the risk gets higher the steeper, and this is getting steep, that the trend is, the trend lines, or the moving averages. So not looking for a whole lot, but still, risk will be high to both sides of the market. Nonetheless, higher highs favored, and we have this, we'll just call it 4 to make it simple math, $4 up or down with an 80% implied volatility. Well, what's going on in Starbucks shares at the close or shortly after the close? Well, you're going to get an extended move beyond $4 per share. At roughly 91, that takes us up to 95. Shares right now are just above 96. So that could be a fade candidate, probably will actually, into Friday's session up against overnight highs, if they stay, at 97. So if Starbucks shares get under 96 and 95, you'll have a gap, but you may have some chances to get puts or to short hedge cover, or again aggressively trade the downside of an extended move target hit, actually extension. So as we'll pay attention on Friday, noting these and many other names in terms of the plays. But again, just for reference, extended moves are important, they're helpful, but in things like Tesla, they can be dangerous. So you don't just want a knee-jerk reaction or just get a position short because it played into an expected move down. Remember Tesla, we were looking for about a $20, $24, $25 expected move to the downside, and that would have taken it to about $245, but it doubled that. It didn't just double that and go beyond 40 per share to the downside, and after hours trading, this is where it opened. It opened up even worse, or even lower, to about $233, and then it fell $10 more. So this is an example where if it's extended, doubling the expected move way out there on the probability curve, you don't just want a knee-jerk reaction long. It's better to do that into expected moves, into targets, because traders will position, funds will close, balance, rebalance, and that's what creates the fade or the movement in the opposite direction. When it goes beyond that, traders have to rebalance for opposite reasons, and that's mainly to cover losses or to put on new positions, and that extends a market that has gone well beyond the expected move. But again, you'll know more than I do right now, in the evening, in the morning, and of course, at the open. As always, be careful and safe. This is Corey Rosenblum with your Theo Nightly Video for July 25th, 2019.